Global news was quiet over the weekend, but equity markets managed to edge marginally higher on Friday trading. The bankruptcy of Chrysler is hitting media headlines as their restructuring plan begins to unfold. A new entity, which will include Fiat, as well as the US and Canadian governments, will need to bid for Chrysler assets through the courts. In other news, analysts are expecting to see another bad round of US employment numbers this week. They expect to see unemployment in the US reach a 25-year high, showing the labour markets will be one of the last areas to emerge from this recession. It is estimated that another 600,000 workers were cut from payrolls last month, taking the toll to 5.7 million since December 2007. With the drop in the official cash rate to the lowest level ever, I was expecting to see both wholesale interest rates and the currency edge lower. They both fell immediately after the announcement, but since Friday, the New Zealand dollar has crept up against the US dollar. It now sits just over 57 cents. This shows just how weak investors are seeing the US economy. Even though our interest rates and economic outlook are also weak, we continue to look a bit better than the US and other economic powers. Employment data is out later this week in New Zealand, and it is expected unemployment would have climbed. In New Zealand, we are facing somewhere close to 5% unemployment, versus in the US, they are facing close to 9%. Unemployment is likely to worsen well after we see some economic growth. Companies tend to keep trimming staff and spending in a bid to shore up profits until sales show sustained improvement. Last week was a pretty good week for Kiwi dairy farmers, with an increase in Fonterra payout. Beef farmers will this week be happy to hear that the US imported bull and cow prices lifted a few cents. It is likely that the hole in beef numbers in New Zealand is now really being felt in supply to the US, and buyers are getting a bit nervous. While the cow cull in the US is likely to more than fill this gap down the track, this is not going to eventuate for several weeks, if not months. There could be a sweet spot for some better prices until this eventuates. When the US cow cull does hit US slaughter numbers, indicators suggest there could be a slight drop-off in prices for bull and cow. Steer prices will likely continue to be influenced by the downturns in key Asian markets.